Hi everyone. Thanks for sticking around. My name is Wolfie Zhao. I'm a partner at BlocksBridge Consulting, and I'm also the founder of the MinerMag, our in-house research and data platform focusing on Bitcoin mining. And this is our next session about the future of Bitcoin mining pool. And we're going to have two guests for the session. Maybe we can get started with Kev Zhang is the Senior VP at Foundry. Yeah, Kevin can go ahead, tell us about yourself, and we will wait for our friend Leon from ANTPOOL, sorry.
Yeah, I think we had a slight scare. We were afraid the halving came a little early. We lost half our panelists. Ah, there he is. Cool.
Yeah.
So we're doing intros?
Yeah.
Cool. So I'm Kevin Zhang. I'm the SVP of Mining Strategy at Foundry Digital. We're a wholly owned subsidiary of DCG. And we like to think of ourselves as a pretty integral player in the mining landscape. We're best known for our mining pool, Foundry USA pool. We also do a bit of our own proprietary self-mining. And more recently, we started launching additional services to better help miners, especially in the North American ecosystem, ranging from logistics, deploy, where we actually send a team out to help you unbox and rack your miners. We're working on software to help you manage the miners better, as well as on-site management and fleet management. So really kind of work on the entire stack of the Bitcoin mining ecosystem.
Yeah. Leon?
Hello, everyone. I'm Leon, the CEO of ANTPOOL. And I'm founded a Bitcoin mining platform in 2013, 10 years ago. And now I'm working at ANTPOOL. And ANTPOOL founded in 2014. And ANTPOOL is one of the leading crypto mining pool. And we have the nodes deployed all over the world. We provide stable, effortless, and efficient mining experience of global users. As a blockchain infrastructure company, ANTPOOL believes that technology can bring infinite prosperity to the blockchain world, and it's committed to supporting and developing the POW ecosystem.
Yeah, thanks. So we're going to talk about the future of Bitcoin mining pool business, and I think a couple of months ago, like ANTPOOL celebrated like the 10-year anniversary. So like mining pool business has come a long way, and it's about a decade. So I guess like before we talk about the future, let's review about the past. Like over the past decade, you guys have been around for a long time. What are some of the biggest change? Like the business model of Bitcoin mining pool has not really fundamentally changed. It's still like doing the same kind of business, but I think the marketplace has reshuffled a lot. So yeah, maybe you guys can go over a kind of review for our audience. What are some of the biggest changes over the past, especially past like 4 or 5 years in the mining pool marketplace?
Sure. So taking a look back, if we're looking like 4 or 5 years ago, I think it's threefold. There's been 3 different categories of change. First is the geographical distribution. This time in 2018, 2019, not only were the physical mining facilities and data centers located primarily in China, the concentration was even that much heavier and oversaturated with mining pools. Outside of Slush Pool, all the other major top 10 pools are based out of China. So over 90% of the global hash rate was being funneled through one jurisdiction. So there's that one element. Then there's also the types of miners, right? The equipment obviously changes quite frequently, but so do the mining customers. And you'll notice that there's been a gravitational shift towards a lot more publicly listed miners, especially as it's migrated over here to the West. Capital is raised very differently rather than private investments over in China. Now you have publicly listed miners and shareholders and boards. It's gotten a lot more institutional. And obviously there's also the payout schemes have changed quite significantly as well, right? 5, 6 years ago, people weren't as concerned with transaction fees. We obviously had a very recent controversial run-up with transaction fees on blockchain, but miners reap the benefit of it, however you feel about it. That's a very big, important lift to us. And depending on your payout scheme, you may or may not be, as a customer, you may or may not enjoy some of those transaction fees being passed forward to you.
Any thoughts on that, Leo?
Yes. In the 4 years, I think the first, congratulations, Kevin.
Oh, thanks.
Because the hash rate of Foundry is growing very fast in 4 years. Yeah. I think if you look at the distribution of global hash rate, more than 50% of the hash rate is in United States. This is one of the reasons why I'm here today. I think the biggest change in the mining pool business in the past 4 years is the change of the business region from Asia, a region centered on China, to the North America.
Yeah, I think there's another thing I observed, like personally. I think even back just 5-6 years ago, most of the mining pools are just mining pools. But I think over the past years, this kind of business has become more integrated with a lot of other services on top. But by that I mean, if you look at the biggest 10 pools, most of them are somewhat affiliated with other services. Like ANTPOOL has, Bitmain, it has an Alpha, and Foundry, besides the Foundry USA pools, also has a lot of financial services that's built on top, and other pools have exchange to back them up. So I think that's also attests to the institutionalization of the audience and the users.
Yeah, absolutely. We've definitely become a little bit more of a conference for warriors, throwing a lot of parties as well, a lot of social gatherings too. But
do you think what is the future look like? Do you think the mining payout model is gonna change somehow based on what's the current hot topics of the ordinals and BRC20? The fees goes up, but then pretty swiftly comes down again. Right now, it's pretty normal for the hash price. But what do you think this changed the landscape, if at all?
Yeah, so it's a really important question. And there has been quite a lot of development in the past 5-6 years with pool payout fees. We touched on it briefly in the last question, but to go a little bit more in depth, mining pools in their first inception 10-11 years ago, the payout methodology and model was a PPLNS model, where the customers and the pool participants share in the risk luck of the mining pool. In other words, if a mining pool is luckier and they mine more blocks, they pay out more to the customers. On the flip side, if a mining pool is not as lucky, they aren't mining as nearly as much, the customers, they take on the risk and they get paid less Bitcoin. That's changed significantly. As the industry's gotten more institutional, the capital barrier of entry's gotten bigger, miners and the pool customers are expecting a little bit more, are hoping for more risk mitigation, more flat revenue projections in terms of Bitcoin. So we've shifted more from a PPLNS, pay per luck number of shares, model into a PPS model, or pay per share. And that's where the mining customer actually takes none of the luck risks. The pool takes that on. So if the pool is lucky or unlucky, that doesn't matter to the end customer. They get paid their theoretical share of how much hash rate it contributed to the network and to the pool. And what's changed in the last couple years, especially with the block size debate and with transaction fees being a major factor, now there's payout models specific to just the transaction fees. So you have FPPS and PPS plus. I won't go too much in the weeds there, but those are just either pay theoretical transaction fees or you pay the actual.
Any thoughts on that, Miguel?
Yeah, I think no matter what the scale the miners are at, the payment models should be relatively similar. Most of them will still choose the PPS like distribution model, PPS plus or FPPS payment models. They are very similar, where you will get paid no matter if the pool finds a block or not. Of course, ANTPOOL provides a variety of income models for users to choose from, including solo and PPLNS. Miners can freely choose various methods on demand in ANTPOOL, but most of them will choose PPS. Yeah.
So you talk about institutional demand, that they would prefer a more kind of stable and steady projected revenue from the mining pool. So do you think that doesn't mean that we will not see more public mining companies doing their own pools in the future, or is it mostly going through existing infrastructure? Because I see Marathon, for example, they have their own Mara pool to capture the upside, I guess, when there's a pretty high surge of the transaction fees. But yeah.
Yeah, I think that's a good question. So, frankly, the mining pool business is a really shitty business.
Yeah.
You're taking all the risks from the customers,
and
right?
Slow margin.
There's on any given day, we could be minus 100, 200 BTC, right? And that's any top 5, top 10 pool. It can be quite aggressive, the volatility and the luck involved. One thing I don't think is appreciated enough is even though mining pools, we do charge a little bit of fees. These are sub 1% fees for usually our biggest clients. We have to have a cost of capital and a reserve of Bitcoin that's readily available for if we go on these very unlucky streaks. And obviously, we're not like some of the irresponsible lenders out there. We're not rehypothecating it. It's just Bitcoin that's sitting, waiting in case we go on these bad luck streaks, right? So yeah, I don't think it's a coincidence, whether it's Mara or some of the DMG, some of the other publicly listed miners, they have rolled out mining pools and did these fanciful PR announcements. It's usually during the bull market when they're flush with cash. But when times get tough, like it is now, people are consolidating not just their mining businesses and their infrastructure, they're also consolidating mining pools and gravitating to trusted partners like a Foundry, like an ANTPOOL.
What about you? What do you think, Leon?
Yeah. I think in the future, the payment method of mining pool will continue to be based on PPS. Consistent with the miners' pursuit of sustainable income, and it has been certified by time because it's been there for around 10 years.
And I think, go ahead.
Yeah, the exploration of the mining pool payment method has passed, but the exploration of the mining pool business model has just begun. The previous mining pools were in the era of high server fees, and it was a very profitable business. But as the old saying goes, the business that has always been highly profitable will not last. The era of low pool fees has arrived, and the business model that really sold on fees will definitely change. And however, the situation of ANTPOOL is quite special. Since its establishment in 2014, it has focused on mining pools. In the future, we will continue to focus on mining pools and continue to maximize the low profit business.
Yeah, I think an interesting point to all this is not only do we operate a mining pool, we're a customer of our own, right? So whether you're ANTPOOL and they run a lot of the equipment that they manufacture at Bitmain, we also are a decent-sized self-miner, proprietary miner ourselves. So selfishly, we want to have the best payout methodology for our own business as well. So I think there is constant iteration in looking at how pool payout methods will evolve. I think a big focus moving forward will be around the fees. And a lot of it's also just educating customers about the fees. When fees are less than 5%, no one really bats an eye at it. But when they double the block subsidy, that makes a huge difference.
What does that leave with the smaller scale miners, like customers, like retails? How do they play in all this?
Well, I think for our pool at least, we don't have as many smaller scale retail miners. But when it comes to pool payout methodology, it's all the same. It's all just proportional shares, right? 1% is always going to be 1%, 5% is 5, et cetera, right? So for them, I think it's important for them to be aware of who they're mining with. One of the things I think retail customers have gotten the short end of the stick when it comes to, in the past, historically picking a mining pool, because there is tiered pricing, right? Usually the more hash rate you bring to the pool, the more discounts you get on your pool fees. So whether it's ANTPOOL or some of the other pools that have traditionally been out there, the default fees are usually a lot higher, sometimes upwards of 3 or 4% for a retail customer that's not bringing that much hash rate, whereas a larger customer is 1% or less.
Are there any thoughts from Leo?
You say small miner?
Yeah.
Yeah, we welcome small miner. Yeah.
Well, I can think of a question like maybe this is more for Leon, is because I know Foundry has mostly focused on like institutional public listed mining customers. Like, what is the kind of ratio for ANTPOOL's customers? Like, how much of the hash rate comes from like institutions versus how much of it comes from retail miners?
你是说?
It's like what is the percentage of the, I guess, small individual miners versus like large companies is there any like rough idea whether it's 20% or 80% or 30% or 70%?
So you can speak Chinese and it's clear?
就是小客户和大客户之间的 percentage 的。
In ANTPOOL.
Yeah, yeah.
Now 就现在我还没有准确的数据。
Okay, that's fine, that's fine. Just curious. Well,
I think for small customer, maybe listed public company, they have for Bitcoin mining, the important thing is sustainable.
Yeah.
And the payment method is they will all like PPS. The sustainable and the sustainable revenue is important for them both. Yeah.
Cool. I guess one last question I have for you guys is, like I think Leon mentioned before, the hash rate right now is estimated to have like 50%, more than 50% that's located in North America.
Yeah.
So I don't know if does Kevin from Foundry, like, do you guys think that's a fair estimation?
Yeah, so I think just from our data that we've gathered from our customers and also just with our communications with some of the forecasted hash rate growth, I think that is a fair estimation. About 50-60% of the global hash rate is based in North America, and the majority of that is in the US.
And is there like a rough estimate how much percentage of that comes from like public listed miners?
That's definitely a lot tougher metric, and even if we had that, I don't think we would share it just because we want to respect the privacy of a lot of our customers. But it is I think it is heavily skewed more towards the public miners.
Cool. One last question before we go. What is your estimated estimation for Bitcoin's hash rate to go by the end of this year?
That's a tricky question. So if to stay true to my memeing heart, I would go with 420 exahashes. But in all seriousness, I think hash rate follows price. There is certainly an abundance of warehoused units. A lot of ASICs that have been manufactured waiting to be sold. But whether the manufacturers, whether it's Bitmain or MicroBT, they don't want to flood the market yet with ASICs, right? For them, they have to be careful with how often they release the miners. And it comes down, the bottleneck right now is one, the price of Bitcoin, but also the infrastructure space available. Just because you buy a lot of miners doesn't mean you can plug it in overnight. You have to have a lot of capacity available as well.
Cool. Any projection from Leon?
You mean the hash rate this year?
Yeah.
I think next year the blockchain reward halving.
Yeah.
I think maybe in the history we see the price of Bitcoin reduce the halving. Halving brings the price up and up, up and up. So next year the blockchain rewards will halving. I expect to see the price is up and the hash rate is going to up.
Okay, sure. All right. Thanks both for joining us for the panel, and thanks everyone for sticking around, listening to us. All right. Have a good rest of the day.
Thanks, guys.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.